Understanding insurance settlement process part 2. Again, this is referring to property claims. It would not matter if it was fire, hail, wind, water, whatever. These scenarios or examples are all the same, and it wouldn't matter the cause of loss. We'll start off example 1, CWP, closed without payment. That is an insider term that adjusters use when they write their notes in the log to finally close a claim for whatever reason. The two typical reasons for a CWP would be damage under deductible. That's a pretty simple concept. The adjuster found $200 worth of damage and you have a $1,000 deductible. You'll be getting a nice letter in the mail, damage under deductible. Second reason you might get a CWP, no coverage. Million different reasons why there could be no coverage. Could be excluded, could be outside the policy period, whatever. If you get one of these bad boys, you should absolutely get a denial letter in the mail explaining why there was no coverage. If the adjuster didn't do that or the insurance carrier didn't do that, they really did a poor job. That is an absolute essential or must in the insurance world. You should always get an explanation why there was no coverage. Example 2, I call take the actual cash value and run. So in this example, you've decided to take the $3,000 and go to Cancun. That's fine, but there's some drawbacks to that you need to understand. If you would take the money and not do the repairs, first of all, you'd be losing out on the depreciation. So if you don't do the repairs, you're not entitled to the depreciation. So have fun in Cancun, but you just lost $6,000 by not doing the repair and getting the depreciation. The second thing you might run into or will run into is if you take the money and go to Cancun, whatever the covered loss was, it's not going to be covered again. The insurance company paid for it once. They're not going to pay for it a second time without you doing the repairs. And believe me, they have good records. They keep the records indefinitely, and they have pictures of every loss. So something to consider. There's situations where it might not be a bad idea, but most of the time you're pretty foolish for not taking advantage of the replacement cost benefits. Third example I have here is the roofing company is less than what the insurance company estimated. So in this situation, ABC Roofing came in at $9,000. Understand that the insurance company is making that second payment up to the $9,000, not the $10,000. So you do not make $1,000 in this scenario. The insurance company saves $1,000, and that's a critical concept to understand, and a lot of people don't get that. You have to incur the dollar amount to be paid the full amount. Now, in the first series, I explained if you do the work yourself, you're entitled to the full amount. And that is true because you incurred it. You bought the materials and you incurred the labor to do the repair. But if you hired ABC Roofing, you did not incur that. You only incurred $9,000. So make sure you understand that concept, that the insurance company only pays the amount that was incurred. So you'd be leaving $1,000 on the table if you hired ABC Roofing for $9,000. Fourth example, the ABC Roofing is more than the insurance company. And this happens quite a bit. A good example of this is you find a second layer of shingles on a roof and it got missed by the adjuster. That's fine. What the company needs to do is document that, document it well. If they don't document or substantiate it, they are in risk of not getting this additional funds that they're requesting. So I would absolutely not incur more than what the insurance company allowed unless you have very good documentation, you've documented it well. I'd probably recommend calling the adjuster, making sure that that's okay. Me being an expert, I'm comfortable doing that when I know it's appropriate. But if you have any questions at all, I highly recommend that you get prior approval before going over this amount here. One of the questions I get asked a lot is people are confused when they see this. When you get the second payment, it shows the deductible again. Well, that's just the way the insurance company does their accounting. You do not pay a second deductible. It's just shown on what's called a statement of loss, again, for accounting purposes. And the easiest way to make sure that you're not paying a second deductible would be, it's real simple. You add up the first payment, second payment, and deductible should equal the overall total amount. So don't be confused when you see this deductible multiple times. It's just showing it for accounting purposes. You are not being applied the deductible twice. And a lot of people get confused on that. So use this formula, you'll see that it's not being applied twice, and you should be happy with that.